So if you feel like you're constantly just sort of going around in an endless battle with trading, you feel like that you don't know what tasks to actually do to sort of make that next step in your journey, then this video is basically for you, right? I aim in this video to pretty much break your paradigm when it comes to the markets, right? And I'll explain exactly what that means. After this, I'm going to go ahead and do a breakdown of a Euro USD trade, top-down analysis. So just keeping it as sort of the normal structure that we like to keep things in, right? But let me actually get started. Don't judge any drawings before I've actually talked about them, as there's obviously a lot more talking points. So number one, right? You don't trade the markets. You trade your belief about the markets. Now, what does this actually mean? Well, there's a book by a guy called Van K. Thorpe. He basically is a neuro-linguistic programmer. He studied the top sort of 5,000 traders, analyzed them, built thought models and psychological models around what they do, who they are, what they sort of what actions they take, right? What decisions do they make? And inside that book, he sort of teaches you how to go ahead and analyze who you are. But just to take a few key points away from it, right? What you need to understand is that every single thing in your life, right? Every single characteristic, attribute, personality trait is all reflected inside the market, right? I'll give you an example. If you're in an abundance mentality, if you feel like money is abundant, if you feel like opportunity is abundant, right? You're not going to be as fearful if you miss a trade, right? You're not going to be as fearful if you take a loss, right? Because you know that the bus is coming, right? You know that if you stand at this point and wait for the next trade, that it's going to be there, right? Versus the guy who's got the scarcity mindset, always maybe worried about when the next trade's going to come. If you miss a trade, you might become vengeful, right? You might have an angry characteristic where you go ahead and you're chasing the trade because you feel like the market owes you something, right? You've got that sort of chip on your shoulder. So just number one is basically you want to write down who are you, pretty much. Like you want to really understand, and this does require a strong level of self-awareness, which if you don't have, you need to acquire, because every single profitable trader has this. You need to really understand who you are as an individual, right? What are your strengths, what are your weaknesses? Because if you don't know who you are, then you don't know what sort of trading system to make. You don't know what issues you have in trading. And this is why I'm such a strong, or why I largely promote journaling, is because if you're not journaling what you're doing, your thoughts, your feelings, how you're approaching these markets, then you're not going to progress, right? So number one is to understand who you are. I definitely pick up this book if you haven't, right? It's going to really explain to you in a lot more detail actually how to go ahead and do this, right? Number two is to stop trying to crack the algorithm. Now, I know as ICT traders, we love to get to this end destination where you sort of think that you're going to learn more technical analysis and you're going to become better and better and better. But I'm here to tell you it's diminishing returns. Like, there's a point where more technicals is not going to improve your ability to trade at all. Now, I was in this exact position. I thought that, you know what, I'm going to hop onto every single one of ICT's lives. I'm going to really understand why every single candle moves. And I'm here to tell you, it is not what the successful traders focus on, right? You are never going to know what every single candle is doing, why it's doing it, and it doesn't need to be done, right? Trading in of itself is understanding that there is inherent risk. You're going to lose trades. You're not going to know where the market goes every single time. And you need to drop that mindset. You need to drop the fact that you're never going to lose. You need to drop the idea that you're going to be able to call the market on the 1 minute from point to point to point to point to point. No one is doing it, and it's not necessary to make profit, right? This is another thing I'd say is go ahead and study people in the industry that have done well, right? Like the Market Wizards book, for example, it's really good. When an ICT trader actually goes into that more sort of knowledge surrounding those more veterinary traders, you understand a lot more about what this industry really is and how to go ahead and tackle it. Now, the reason I drew this up, and this is probably like blasphemy inside of the ICT community, but what I'm trying to get at is that that different technical analysis traders are getting to the same conclusions using different material, right? So for example, the guys here, we'd look at this as a liquidity sweep market structure shift, right? Brilliant pattern. Very, very good in terms of entry. And if you know where the bias is, this is great, right? But just to show you here, right? A support and resistance guy can get the same conclusion, okay? Does it mean he will do it like us? No, he might say, okay, cool, this is support and this is he's going to get faked out here and blah, blah, blah. Yeah, 100%. But the point I'm trying to get at is the technicals isn't crazy important. Like, yes, do I believe that because we trade ICT, we have an element of an edge in of itself just because the technicals are strong? Yes, but every single technical analysis venue or venture is profitable, right? It doesn't mean that support and resistance isn't profitable, trend lines isn't profitable. If you go on YouTube, you'll find millions of people trading these things, millions of sort of the veterans in the space trading these things and doing very, very well. Okay, so don't be part of that sort of cult, ICT cult, where you think that nothing else works and just because we trade ICT we're better than everyone else. It's not true, right? Like I said, stop trying to crack the algorithm. Just focus on what's actually going to better you as a trader, right? So what are the points that are actually going to improve your ability to become better, right? So two things I would say, okay, along with all the mindset stuff. So this is more just technical based, right? So if we're not trying to crack the algorithm, what are we trying to do? Well, we're trying to focus on bias, and then after you focus on bias, how are you looking to get on side, right, in a high probability manner? Okay, so bias is a big one, right? I have quite a few different sort of resources on bias. I'll leave a link in the description for a sort of PDF that I use to go ahead and break down bias, right? So number one with bias, I'll give you one sort of tool that I like to use, and it's included in the breakdown of this, is using previous candles high or low. Okay, so for example, let's say we've just seen this where we've seen potentially an up candle here, a down candle here. Where would we anticipate the next following candle to go? Obviously you want other context and whatnot, but let's just say this was all you had, right? We'd potentially want to see the following candle be bearish, right? Just based on the idea that, are we more likely to reach for previous candles high or previous candles low? Just in terms of proximity, it's going to be low, right? So let's actually go ahead and break this sort of bias and then how to get on inside of the markets. I'll show you exactly how I like to do this. And yeah, so we'll go ahead and break this down. So first of all, right, before I actually do cover this, right, I'm going to break down Tuesday the 17th of December. So if you want to go ahead and analyze this, you can. Just to show you as well, I called this move out prior, so this isn't something I'm just making up and doing a case study on. Sometimes I will do that, but in this example, you can see here, this is sort of the analysis beforehand when I got up after Asia had printed, and that sort of in between Asia and London. I wanted to see an Asia low of day setup, which I'll explain in a second, which is one of my daily cycles. Looks great. Would prefer London to retrace a little bit, but we could just fly from this M15 FEG. So I marked up both areas, just showing the FEG to outline what I was talking about. We could either push from this FEG or the breaker, right? The breaker being this level, which I'll show you on the chart in a second. As you can see, what happens, price retraced to the breaker, right? And you can see that you can check the timestamps as well, right? I'm trading from London, so you can see the timing there. Again, breaker. I wanted to see us push higher, and here you can see nice reaction wave, good H1 closure. You can see shave the risk, blah blah blah, and then we should expand to the last 30 minutes of London, and you can see there we go, we get that, right? I wanted to see this get reached for, that was sort of my draw. We didn't get that far, but we met this rejection block on EU at the sort of specific time window that I wanted to see price stall at, right? So let's actually just go ahead and break down exactly what happened, how I formulated the bias, why I had that bias. And yeah, so first things first, let's always do a top down. So let's go on the monthly. Right now, you can already see sort of what's happened here, but I actually went ahead and did a review of price before this week actually expanded. I do those for free on my Discord, so I'll leave that in the description as well. But basically, I wanted to see, right, so I normally start with looking at whether we're going to reach for previous month's high or previous month's low. So based on the monthly, I was interested in previous month's high, which I'll show you why on the weekly in a second. Right, we had taken out this high and rejected. So on the monthly, it was a bit difficult because we were sort of stuck in between this consolidation after reaching for this inefficiency on the weekly. However, on the weekly time frame, number one, we're bullish, right? So just understanding market structure, understanding the trend. Typically, when we're trading bias, we want to trade on side, right, with the trend. Does that mean that sometimes ideas can be counter trend? Yeah, that's completely fine. But in this example, right, I was looking to trade on trend. So, for example, clearly we're bullish, right? I'm keeping this very, very simple. And I'll actually make a video in terms of if we're bullish, what do I exactly want to see? But because I'm bullish here, right, I want to see bullish arrays hold. And I want to see any old bearish arrays act as support. And I want to see any lows that are taken, those lows act as total stoops to go higher, okay? So because, like I said, I'm bullish, I want to see bullish structure, high highs, high lows, and the rest of it. So we came into this weekly FEG, right? We formed a swing point, 1, 2, 3, right? After we formed the swing point, this week for me is super high probability to forecast to the upside. That's another reason why, again, I was looking for previous month's high, right? So I know that it's very likely, around about 70%, that we're going to go and reach for this low or this high, okay? Because it's previous month's high. And you can use data to back that up. We then knew, like I said, with the swing point, that I want to see this week expand to the upside. So I've already got a weekly bias now, okay, number one, before this weekly candle's even been printed. And again, like I said, I've forecasted that on my free weekly outlook. Number two then is looking for what arrays could we go ahead and trade from, right? So if I understand that the weekly is going to start from here, right? Anything that, hold on, let me just write this out. Any move beneath the open is going to be considered a discount, right? Because we know that any move lower, let's say this candle is appearing black, right, which would be bearish in this sense, we know we can look to long in that and it's going to be super high probability. So in terms of what area, right, which areas can we look for price to get into? Well, the one that struck out to me and the one I mentioned on that outlook is this weekly immediate rebalance, right? So you can see how we tap that and then we expand away from that level, okay? Let's go on the daily now. So again, understanding the structure, right? We'd switched from sell program to buy program. How have I identified that? Well, I see, if we go on the line chart, it's probably the easiest way to see it. We can see the line chart represents the bodies basically, right? So we can see how we were respecting bearish arrays, price was making lower lows. Then we can see a shift above, right? This these three consecutive down candles to go ahead. We got a closure through that, which meant we switched from that sell to that buy program after reaching into a higher time frame PD rate and sweeping liquidity. Okay, so similar to that drawing I drew up earlier where we had the consolidation, we had the move lower, and for example, support and resistance guys will be looking at a flip like that, right? We use the immediate rebalance level plus the idea that we switched from bearish to bullish, right? So again, coming to the same conclusion. Now, what was sort of next? Now, on the daily, right, we did have a consolidation on Monday, okay? And if you guys have been following me for a while, you know I'll really like that. When Monday sort of stalls and builds liquidity for Tuesday to go ahead and sweep it out and go ahead and reach higher, okay? So this is, I guess, a little key tip as well. When we go ahead and form two daily highs like this, if we go ahead and pierce this and then show displacement higher, typically it's a really strong reversal signal, right? And that's just from my sort of however many years experience. So when we pull the lows like this and sweep them, like I said, typically it's very high probability that we're going to go ahead and reverse from this level. Number two, it went ahead and came into the weekly immediate rebalance, right? So we swept liquidity into a higher time frame level, okay, and to conclude from that, we formed Monday, right, which was that consolidation, and then Tuesday went ahead and formed what potentially would be low of the week. So in terms of a weekly cycle, right, my favorite cycle, the most prominent cycle, is where Monday's going to create that initial range, Tuesday's going to create low of week, and then we're going to see Wednesday, Thursday, and sort of Friday continue off, right? No, I'm not saying that all these 3 days will be a continuation. Typically Friday, let's say, will tail off Thursday or Friday, but we know Wednesday is going to likely be that strong expansion. Okay, so the fact that we've gone ahead, formed a low on Tuesday, right, inside of the weekly immediate rebalance. So notice how much confluence we've got here. Okay, notice how I'm putting so many different things together to formulate and be confident in the bias, right? So this is just the bias work. See, notice how we haven't even gone on the lower time frames yet, right? So this would be in that part where I mentioned in the screenshot that I deleted, didn't I? This would be the bias part, right? So now let's actually go ahead and understand how would we get on side with something like this, okay? So let me actually just replay the Tuesday, right? And as you've seen, I've called this live as well. So I'm just showing you sort of my exact thoughts of what was going on at the time. So let's fast forward this to the start of London, right? Because I'm not going to trade before London, right? I'm not trading during Asia. Okay, so again, remember, anything beneath the weekly open, it's good. Okay, so alright, so that is Asia. Let me just go one more. Alright, there we go. So this is before London. Right, so what do we understand on the hourly here, right? Well, we've taken out 2 previous days lows, again, into the higher time frame level, and now also intraday, right? We've pulled 2 equal highs up here. And we've also shown a shift from sell side delivery to buy side delivery, right? Why do I pick this black candle? These 2 are the consecutive down candles before the up move. Okay, so order block, if I just get rid of that, another key area is the breaker here. Right, there we go. Right, these 2 green candles before the down and then the push higher. Okay, again, probably more evident on the bodies, right, if I just do that. So anyway, breaker level, let's now drop to the 15. So this for me, so the way I characterize a high probability expansion is using daily cycles. So daily cycles is basically my roadmap in how I want to see the daily expand. Okay, so the way I came up with the cycles are, one, they're an sort of inspiration off of ICT's daily profiles. If you go to, I think it's month 8 or 9 of the core concepts, I use he talks about daily profiling, where he'll say, okay, in the profile he wants to see London create low of day and then New York go high. He has a couple profiles, right? What I did was I studied tons and tons and tons of daily prints, and then I went ahead and figured out what cycles I thought were most prevalent and what I thought was sort of occurring in the market, and that's how I came to these daily cycles, right? So this one, right, where Asia goes ahead, sweeps the liquidity and goes higher, this is what I would call Asia high of day. Okay, so what I would like to see in this cycle is Asia go ahead, so this would be Asia low of day, right? Asia high of day would be the bearish version. So Asia goes ahead, creates the low. I want to see strong displacement down to sweep the liquidity and then displacement higher. From that, I then want to see price retrace in during London and then expand, okay, to a specific time in London. So let's actually just see what plays out, right? I mentioned in the Discord that we were either going to push from this FEG or from this breaker, right? Because sometimes Asia high, this cycle can literally just rip from the open. So let's see what happens. All right, so we go straight for the breaker in the first 15 minutes. That's very ideal for this cycle based on sort of my countless back-tested versions. Now there's a couple ways to go and approach this, right? You can just execute straight, right? And you could potentially have your entry at the breaker, right? Or you could go for the 3 PD array rule. For example, let's say you've got breaker, FEG, FEG. Maybe you wanted to have your position something like this. Regardless, we're entering on EU, right? Which I'm not going to cover, but you get the point, right? There's multiple ways to get on side with this. So because I understand, I want to see London expand, I can just enter on the 50-minute time frame here, right? That would be one method. Okay, so when getting on side with the trade, number one is understanding, this is for me, what cycle I'm in. Okay, so for me this is Asia low of day, so then I'm going to use certain techniques to get on side with this one, right? If it was like a London protraction, then I'd probably use the daily open, and I'd try and buy beneath the daily open, right? So depending on what cycle is, depends typically how you approach it, right? Because for this one, I don't want to see London go ahead and sweep this because I'm anticipating an Asia low of day cycle. Okay, so like I said, you can literally just execute on the breakup, which is what I did. Let's see what happens from here. Okay, so we go ahead, we play around in there, and then we start expanding higher. Okay, and you can see, there you go, the box is starting to form now, the indicators for coming, and then we expand to the end of London, right? And that was the move, right? On EU, it looks a little bit more pronounced, the move, and yeah, we end up stalling at this level due to key time, which was what is typically what you see. So one method is, again, just to enter off the 15-minute, and you can do that, and that's perfectly fine. The other method, okay, I'd say, is to go ahead and get more of what I'd refer to as a scalp entry. So you can go in on the 5-minute. Right? I wouldn't. You can go on the 1 minute sometimes. I don't really want to be an advocate of that, just in case that your experience level isn't major, like very, very, very high. And I wouldn't even say I go on the 1 minute often anyway. So 5-minute, lowest, let's just say 3-minute, for example. Okay, what you can look for is some sort of market structure shift and then an FEG tap. So for example, with this one, we could say that we've swept liquidity, we've had a market structure shift. Right, I then wouldn't advise entering right here. You're more or less likely to get chopped about. One thing you got to understand is, right, when we enter on this lower time frame, this could fiddle around for a bit and then go. Right, this is why sometimes when you're entering off a really low time frame, like the M1 inside of this, you're gonna get caught. Right, let's say, I don't know, potentially this move higher, and then you're gonna try and trade this level. Yes, it looks great on the 1 minute in hindsight. But what you gotta understand is that this could fake you out a million times and then go higher, and that's why we don't want to go on a really, 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 really low time frame. So let's just say 3-minute, and I mention this all the time about the propulsion block entry, right, being a little bit more favorable. Okay, so let's say, for example, you allow the first order block play, okay, which would be this order block formed, right? Allow that trade to play out, and then once you get the closure, or let's just say fast displacement past the following candle, which is the propulsion block, right? So it looks something like this. So instead of playing this one, and this is like when you're entering off a lower time frame like this, instead of playing this one, right, so instead of playing this trade here, wait for the expansion away, formation of a propulsion block. Sometimes you're not going to get the tap into the propulsion block, so after you get the displacement, you can just execute, right, after you get like a strong move above the swing high. So this one's a little bit messy, but let's just say past, I don't know, this candle, you were comfortable and you said, you know what, we've got the displacement past the propulsion block, now I want to play this, right? In terms of SL, I'm not going to force you into anything, but yeah, but let's just say you wanted to keep it conservative, I'll put it here, less conservative potentially at that level. But realistically, once we form the propulsion block, we shouldn't really want to get back to this level, okay? And then in terms of target, let's just say you're looking for a fixed 2R. Let's see, do we get a 2R if we do this? Yeah, great. So let's say we're aiming for a 2R. There you go, right? You've managed to secure your 2R. You've entered beneath the weekly open, right? And yeah, I'm not going to recap every point, but you can see how we've come to that conclusion, and understanding that the entry is the final part of this, right? So I guess another key lesson here is this draw doesn't actually get hit until 2 days later. So does that mean we were wrong, right? Because like I said, I was looking for this draw. Well, no. The way you want to define success with regards to bias is the session, right, that you're looking to trade, does it trade towards your bias, towards your draw, sorry. That's how I determine success with regards to a bias, right? Because if we've traded in a line with where you wanted price to go, then it's a success, right? It doesn't have to tag the level. The draw acts as a magnet, right? And as long as it's being magnetized to the right side, you're all good, right? So I hope this was insightful. I know I've covered a crazy ton of stuff. Maybe watch this a couple times, cover it, just cover it multiple times to really understand sort of what's going on. If you do have any questions, key points that maybe I've mentioned, like the immediate rebalance or the propulsion block, do ask me, as there's other videos linked that sort of talk about those different concepts. So yeah, hopefully you guys have enjoyed, and I'll see you in the next one.